What point does a mild recession, which probably already means that they're telling you it's mild, but they know it's going to be worse, if they keep raising rates, what happens next? A mild recession turns into them telling you it's going to be a mid-level recession, and then it actually is going to be a much worse recession. My point is this, guys. Be careful here, again, in the crypto markets. I have seen it before and I've seen it again. The bullishness in Bitcoin and crypto right now is equal to the bullishness we saw at 69,000. That to me is a warning sign, because to me, that's a negative divergence. To see that much bullishness at such a lower price, that is not a good sign.
Gareth Soloway accurately predicted that Bitcoin was going to crash from its recent $30,500 peak. Bitcoin had been testing $30,000 to $30,500 price several times, hoping to break from it, but in the end, it couldn't sustain the position and came crashing. What does the future hold for cryptocurrencies, and what exactly is happening at the macroeconomic level? Gareth believes that the Fed isn't being entirely honest with Americans, and things are a lot worse than they're admitting. We could see the bubble burst, and all assets crashing soon. But one thing is sure not to crash, and that is the quality of the analysis that we bring you, so subscribe to the channel now. First, Gareth talks about cryptocurrencies.
This is what drives me nuts. Everyone's so regimented. I still remember when I was calling the high at 69,000 with the drop to 20,000. Everyone was telling me, oh, you don't know what you're talking about. You know, the on-chain analysis shows we're going to 100,000, X, Y, and Z. You know, and I'm like, dude, the charts are the charts. Psychology is psychology. It's worked for hundreds, if not thousands of years. But somehow you're going to come in here and say that, oh, some new metric, on-chain analysis is going to play out. To me, on-chain analysis is the same as fundamental analysis. Fundamental analysis long-term makes sense. In the short term, it has nothing to do with greed and fear. Greed and fear drive the markets. That's just a simple explanation, and it's absolutely true. So when you have this scenario, guys, where you have greed and fear, guess what? Fear is going to trump fundamentals, on-chain analysis every time. Now, again, we're now at a point, and I've said this before, number one, we're in a cycle where the Fed is not printing money. That's very, very tricky for Bitcoin. Doesn't mean Bitcoin's not going to break out here, but it makes it harder. So to think that we're going to get the same 4-year cycle when Bitcoin is not being propelled by massive inflows of money from the Federal Reserve, from the US government, etc., that's problematic. In addition, every which way, I'm seeing Gary Gensler and the SEC suing this person or this company or that company. There's a lot of issues here. Big money is not going to commit. So again, I bring my point back to saying, well, who is going to drive the alt season if all the small investors are banking on it, thus in? And the answer is, well, big money's not coming to the rescue because they're not willing to commit capital in major amounts because there's no clarity, there's no structure, there's no rules in the crypto markets yet. I mean, literally Coinbase yesterday said that they were thinking about moving out of the US because they have no clarity. And this is a publicly traded company. So anyways, my point is this, guys. Be careful here, again, in the crypto markets. I have seen it before and I've seen it again. The bullishness in Bitcoin and crypto right now is equal to the bullishness we saw at 69,000. That to me is a warning sign, because to me, that's a negative divergence. To see that much bullishness at such a lower price, that is not a good sign. Now, again, will we see new lows on Bitcoin? Will my 12 to 13,000, signal come true? Will 9,000 maybe get hit? I don't know. The point is, just be careful up here. Make it prove that we can get above 30,500 by price getting there, staying there for at least a week. Then you can start to say, okay, now for sure the lows are in. Doesn't mean we won't have pullbacks, but at least the lows are in.
If you thought 2022 was a crazy year for crypto, you haven't seen anything yet. 2023 started off with a bang, as Bitcoin and Ethereum gained in January and February, fueled by what some would say is institutional adoption, innovation, and optimism. But then things took a turn for the worse in March and April as a series of events shook the crypto market to its core. So what caused the crypto market to crash? The crypto market was hit by a perfect storm of negative factors in April of 2023, which combined to create a panic sell-off of crypto assets. Here are some of the main culprits. One is inflation and interest rates. But the real issue is regulatory uncertainty and hostility. The crypto sector was facing increasing scrutiny and pressure from regulators all around the world who were concerned about the risks and challenges posed by crypto to the traditional financial system. The US Securities and Exchange Commission, or SEC, was particularly aggressive as it notified Coinbase, the largest US-based crypto exchange, that it planned to bring an enforcement action against it for offering a lending product that involved crypto. The SEC also sued several other crypto companies and individuals for alleged fraud, manipulation, and securities violations. What are experts saying about the future of crypto? Bitcoin and other cryptos crashing isn't an isolated incident, but rather part of a larger trend of volatility and uncertainty that characterized the crypto market since its inception. Crypto has shown remarkable resilience and recovery after previous crashes, but it also faces many challenges and obstacles that could trigger more turbulence and corrections. Brian Armstrong, the CEO of Coinbase, said that the US has the potential to be an important market in crypto, but right now, we're not seeing that regulatory clarity is needed. And he further revealed that Coinbase was likely leaving the US. He said, anything is on the table, including, relocating or whatever's necessary. He blames the SEC for all the uncertainty in the market, saying the SEC has caused untold harm to America with its policy of regulation by enforcement. We will fight to fix that.
The kicker here is partly earnings, right? We got some earnings out of Netflix. We're going to discuss that in just a minute. But overall, really what's going on here is more than anything, you have some Fed commentary that is starting to spook the market a little bit. For instance, I believe there was one Fed, I don't know if it was Bullard, but he basically came out and said he doesn't see a recession and the Fed has to stay the course and continue to raise interest rates. Now, the issue with that is that we just heard last week from the Federal Reserve that we were going to have a mild recession. So there's this dichotomy, there's this divergence building within the Fed where some people are still saying, hey, listen, mild recession, but we're going to still raise interest rates. That's freaking the market out because the market is smarter. You look at the 10-year yield, it's all the way down. All right. You don't have the 10-year yield trading where the Fed funds rate is trading at 5%. You have it into the 3% range because the markets are anticipating that essentially we're going to have a recession. So these are things that are going on right now that we have to be aware of, and that's pushing the markets down. There's also another factor here, and this is something that I've been surprised has been a lagging indicator for the markets, that the markets have not picked up on. Not only did the Fed say that we're going to have a mild recession, but we also heard Warren Buffett last week say that one of his retailers that he owns, the year-over-year sales were down 22%. 22%. That is a massive number. All right, you know what the market did when the Fed said a mild recession, when Warren Buffett said this? They did nothing but float. They floated higher, in fact. The market is ignoring things. And one of the sayings that I always tell people is this. I say, listen, guys, the market only cares when it cares. And it sounds like a weird saying, right? Like the market only cares when it cares. But the bottom line is what that means is the market will stay in a euphoric stage until it finally gets slapped in the face, realizes something is wrong, and then you see massive selling pressure.
The Fed recent commentary scaring investors is based on their prediction of a mild recession later this year, due to the turmoil after the collapse of several banks. They also expressed concern about inflation remaining too high. All of these are not good signals for the markets. Two stocks that are owned by Warren Buffett's Berkshire Hathaway are being taken as indicators of what's to come. The two stocks are Kraft Heinz and Verizon. Kraft Heinz has a 16% downside potential from its current price of $38.50, based on the average analyst price target of $32.28. The article cites several reasons for the bearish outlook on Kraft Heinz, such as declining sales, high debt, legal troubles, and competition from private label brands. The other stock that has a 25% downside potential from its current price of $55.30 is Verizon, based on the average analyst price target of $41.50. Gareth talks some more about the Fed and the expected recession.
Let's be honest with ourselves. All right, this is look inside. If the Fed is saying we're going to have a mild recession, and remember, their track record is that oh, don't worry about inflation. It's going to be transitory. What do you guys think when they say a mild recession? Do you think it's just going to be like, nah, no big deal, mild recession? Personally, I'd be a little bit more nervous. All right. And again, that's the kicker. Not only that, but then you had, again, a Fed official this morning saying, hey, we got to continue to stay the course and raise rates. So at what point does a mild recession, which probably already means that they're telling you it's mild, but they know it's going to be worse, if they keep raising rates, what happens next? A mild recession turns into them telling you it's going to be a mid-level recession, and then it actually is going to be a much worse recession. And then you go, by the way, there are stocks out there, Apple, Microsoft, trading at valuations that they're almost at all-time highs. They're trading at forward PEs where they were a year or two ago when we had the bull market. That is not healthy. They are being used as a cushion. They're being used as a safety net. Those, to me, are some of the biggest shorts out there when reality strikes that we will see a recession in the second half. And it's not just going to be a small recession. It's going to be a long recession.
The bottom line is, we're not out of the waters yet. The bull market still isn't in view, so invest with caution. And of course, subscribe for more updates and don't forget to give this video a like. We'll see you in the next one.